Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us in the market site at Times Square, New York City, we have Phil Mackintosh, chief economist at Nasdaq. We're going to discuss rates as well as the sanctions being placed on Russia and what that means for foreign direct investment and banking in general. Phil, it's great to see you again. This is our first time back together in 2022. Time flies by when you're having fun here. And let's start off with a market recap and where we are with rates. And we got some, I would say clarity is a good word to call it out of Powell today.
That's for sure, and the market kind of had been pricing in what he said too. So what's interesting is that if you look at the equity markets since we saw the start of the invasion in Ukraine, they've actually performed pretty well, with the exception obviously of the Russian and the Ukraine markets. But the bond markets here have lost about 0.25% on the 10-year. And part of that is because everybody had been watching inflation so much and expecting inflation to be very aggressively tackled by the Fed. And now that we've got this extra risk, everyone thinks it's going to be a bit more measured. Quarter-point raise this month instead of maybe 50. And so all of the interest rate expectations have come back down. And that's basically what he confirmed this morning when we heard from the Fed. Right.
And just a few weeks ago, we were talking about how it went from 3% to 4% when we were looking at mortgage rates. And that was, a big move. And to see it come back by 25 to 50 basis points is really quite another big move. The velocity is really what's interesting here. But let's talk about other data. The U.S. economy looks pretty strong. We're starting to get back here.
And that's the other thing that's helping the market here be supported. So we've seen, Omicron really doesn't look like it did that much damage to the economy at all. It's slowed down a little bit of the services spending, but we're already seeing people bounce back, booking air, booking hotel, booking restaurants. And so it looks like we're back to pre-COVID levels in all of those sort of services sectors of the economy. We are starting to see improvements in the supply chain bottlenecks as well. So things are going quite well. A lot of the pressures in the market are releasing at the same time as spending still being pretty strong. And we saw that with the trade numbers as well recently.
Yeah, you and I, just before we got on here, we're talking about travel picking up on our calendars for work again. So it feels good to get back out there again. Let's talk about the sanctions on Russia. As far as I understand it, they really seem to be mostly financial, really not much energy, which really is the bulk of the Russian economy, and then also the ag side for Ukraine.
Yeah, and that's important, right? So we've heard a lot about sanctions, but they're things like stopping the central bank from using reserves, stopping everybody from using SWIFT in Russia, which is obviously how you do a lot of financial transactions. So it's going to affect trade, but they've purposely carved out energy from a sanctions point of view. And so gas is still flowing. Oil can still flow, although the prices in Russian gas and oil are sort of deflated relative to the rest of the world. But basically, the impact on Russia is going to be smaller because 50% of its economy, of its exports are energy exports. So at the moment, it's really a financial impact. It's banking, it's trade, not so much energy exports.
But the longer this goes on, the more it's prolonged. From a longer term perspective, who's going to want to do business with Russia? Not only because it's going to be more challenging, but the optics in general.
And so you're starting to see that already. So right. Even though we can still technically trade Russian oil, there's become a discount for Russian oil versus all of the other oil benchmarks. So already people are starting to not want to trade even the non-embargoed and non-sanctioned assets. But longer term, I think what the problem is you're going to basically restrict a lot of the exports into Europe, and people are going to look for other supply chain solutions as well. And so you could see less reliance on Russian energy long term. Europe sort of pivoting to more sustainable energy.
Right.
It could net, years from now, be a net positive for Europe's economic stability.
Right, but it's also a net negative for the people of Russia, where, obviously,
absolutely.
Energy employs a lot of people, financial services employ a lot of people.
Yeah.
So.
And in the meantime, we'll probably all see quite high inflation because energy, especially oil, is a big component of inflation calculations everywhere in the world. And so we're already seeing prices at the pump here increasing. We're seeing natural gas prices in the northeast here going up, and that's because we're trying to help supplement some of those energy needs in Europe. It's increasing our inflation too.
Could that juice the market a bit if we expect that interest rates will be kept low as we work through prolonged inflation?
I think this is where it gets challenging for the Fed. So they're obviously looking at the war risk and saying we're going to be gentle, but at the same time, this could actually prolong inflation. So a lot of expectations are, we saw inflation because of supply chain bottlenecks. It's meant to normalize and come back down to sort of the 3.5% level in, say, 12 months. But that was assuming that oil went up to sort of $90 and then came back down because we started to produce more. Now we've seen the opposite. We've got oil above $100. We could potentially have shortages for some time. And so we could actually see inflation held up for longer. And that means the Fed's got a bigger problem to tackle. Normally you would tackle that with interest rates, so that would mean more interest rate hikes, but then you run the risk of slowing the economy down and sort of stifling the growth that we've got.
All right, well, it certainly will be an interesting few months to watch, Phil.
Yes.
Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.